the Financial Survival Network. Now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, Stagflation has returned, and it has some major FAANGs. That's spelled FAANG. And John Rubino is here with us now to explain what exactly is going on here. John, we should always start with a definition of stagflation, because you have to assume that most people who watch us and listen to us either A, have forgotten about it because it was 40 years ago, or B, never knew what it was.
Hey, Kerry. Yeah, stagflation is an old idea that's finally coming back in style. And it's a combination of inflation and stagnation. Inflation, obviously, prices are rising dramatically, maybe at a double-digit or so rate right now, which is crisis level inflation. But the economy is slowing down. We actually, in the latest GDP reading was negative. In other words, the economy was shrinking over the past 3 months. So you've got a stagnant economy and rising inflation, hence stagflation. And it's one of the worst environments imaginable, both from the point of view of regular people trying to live their lives, because their wages aren't going up, but the cost of living is soaring, and for politicians trying to get reelected, because this enrages everybody one way or another. There's nobody that likes stagflation except possibly gold bugs, who are seeing their gold and silver go up if inflation keeps rising. But everybody else is mad, so you can't get reelected in an environment of stagflation. And the current crop of incumbents, who, by the way, don't deserve to be reelected, they're going to have a lot of trouble in the midterm elections that are coming up, because it looks like a clean sweep of incumbents in favor of new people coming along. Not that the new people will be any better, but
no, but always do worse.
Yeah, but there's a sense of panic in Washington right now, because they know they're going to get kicked out of their cushy jobs, but they don't know what to do about it, because they have not the slightest idea how they got into this mess, and they don't have any idea how to fix it. So they're just, deer in the headlights right now, just watching this thing come at them, and they have no idea what to do. Couldn't happen to a nicer bunch of people.
Hey, just remember, they're running on the Will Rogers platform. Ignorance got us into this mess, and ignorance will get us out. And
I've never heard that saying before, and I don't think that's the way it works. And as far as incumbent politicians go, I think ignorance gets you into it, and then the result of your ignorance gets you out of it completely. But yeah, we'll see. Just leaving aside the stagflation, though, there's a lot of other stuff going on, and not nearly as funny as something like stagflation, because the world is getting very dark. And for instance, if you look at the stock market right now, it's been trending down, and on this past Friday of last week, had a monster down day. And the companies that have been supporting this stock market for the last 5 or so years, which is basically big tech, the FAANG companies, and that is Facebook, Apple, Alphabet, Amazon, yeah, and a handful of others. And they've been the ones who've been going up while everything else has been stagnant or dropping. And now they're starting to roll over. Just in the last couple of weeks, they've really tanked. For instance, Amazon is down by 1/3 from its 12-month high. Facebook is down by 40%, and Netflix is down by 70%. So the stocks that used to support the market are now, they're still leading it, but they're leading it in the wrong direction. They're falling faster than the overall market and pulling everything else down, which is pretty terrifying from the point of view of, for instance, an equity portfolio manager. If you're one of those guys who has to be 100% invested in equities because that's your job, and you've done awesomely because of that over the last decade, suddenly you're staring at basically the same situation as incumbent politicians. You can't fix the problems of the world, but those problems are going to get you kicked out of your job pretty soon. So not just politicians, but the money management community are also petrified by what's happening right now. And, again, no solution in sight. There's no monetary policy that fixes, for instance, a shortage of fertilizer because everybody's sanctioning Russia and they supply a big chunk of the world's fertilizer, stuff like that. You can't fix that with monetary policy, and easy money is the only tool that the guys in charge of the major countries of the world have. You take that away and they're just bystanders like the rest of us. And that's pretty much the situation right now. They can't even make any money insider trading on their policy announcements, because their policy announcements pretty much make the stock market go down now. So unless they're shorting stocks before they make announcements, which I wouldn't put past them, they're both corrupt and dumb enough to be doing that. But unless they're shorting everything in sight, they're not making any money, which for them, I think has been half the job. If you're in the Fed, apparently the way you make your money, or if you're in Congress, you insider trade on your decisions, and you front run your trade, you front run your policy decisions.
Yeah.
And you make a lot of money that way, so you don't feel underpaid. But that's gone now. And one of the happy things about all this is that Nancy Pelosi lost her shirt in the last, which is a disturbing image. Sorry about that. But in the last couple of weeks, her and her husband have probably lost $10 million, and with more coming, probably.
Instant karma. Well, karma, long time in the making.
Long overdue karma, yeah.
It reminds me of one time they asked Ed Koch, he was the mayor of New York, what are you going to do if there's a terrorist attack in New York, nuclear terrorist attack? And he said, alternate side of the street parking will be suspended. That's all the Fed could do, is suspend alternate side of the street parking. Look, John, and I know, they could talk this tough game and they're plowing the markets down. But at some point here, Michael Pento says it, and he's one of the smartest guys in this stuff that I know. He says it, they're going to do a backflip and they're going to reverse the policy because economic implosion, I don't believe they're going to ride the surfboard of economic implosion. I just don't believe it. Now, maybe I'm naive. Maybe I haven't lived long enough. They did it in the 30s, arguably, but perhaps they didn't really know what they were doing that well then. But now they're going to turn around because they're just going to say, all right, we got a housing slowdown, we got a manufacturing slowdown, import slowdown, everything else. We did our magic. Now we can rest.
Yeah,
and the Ministry of Truth. The Ministry of Truth that's being implemented now will back them up 100%, right?
we definitely got to talk about the Ministry of Truth here in a second, but yeah, the Fed will capitulate pretty soon. Largely because that's all they know. I mean, they just have a hammer, so everything looks like a nail to them, and the nail in this case is easy money. So they want to go back to that policy because it's the only thing they understand, and for their entire professional lives it's the thing that has worked. So as soon as they get an excuse to do it, they will. But they can't do it right now because that would mean cutting interest rates in the face of double-digit inflation, which is just, I'm not sure that's ever happened in the history of the human race. It's just not the kind of thing that a central bank is able to justify under any circumstances. So they've got to wait for the economy to slow and for that to pull down inflation and interest rates to the point where it's enough of an emergency that they can justify cutting rates. So maybe year end for that. If we have another
6 months.
Another quarter of stocks getting whacked and of a slowing economy. By the way, housing has to be part of this mix, part of this discussion, because there's a headline today that I think I sent you the link to it, that housing affordability is at the worst level ever now. And the reason for that is that stocks are at record high, or houses are at record high prices, and mortgage rates just doubled. It went from 2.5% to 5% within the past year. Which means the cost of a house, even if the house isn't going up in asking price, what it costs you to buy it via a mortgage is going through the roof right now. So with housing affordability, at a level at which most people can't buy houses, the housing market can't but slow down now. It has to. So add that to the mix of an already slowing economy because of broken supply chains and just generally rising interest rates. And you've got not just a slight recession, but maybe kind of a deep recession coming here. Let stocks tank, housing tank, and the supply chains of the world not get fixed over the final 6 months of the year. And it's hard to see how we avoid a recession. Now, you mentioned Michael Pinto, by the way. He actually deserves a mention here because he's one of the few guys who's talking about this from a bond market perspective, which is really useful because normally when stocks tank, bonds go up. Those two asset classes are inversely correlated. But this time, because of inflation, we're seeing bear markets in both equities and bonds, and now houses, which means no matter what you own, you're getting whacked. And the wealth effect of that, the reverse wealth effect, is going to be to spook everybody across the financial market into becoming a lot more cautious. So, the second half of this year is going to look very different from the first half of this year. And, if anything, it's going to be a lot more chaotic than even the past few months have been.
Hey,
and that's leaving aside geopolitics. Like, okay, we don't have a nuclear war, but the financial markets are still going to be crazy.
They're still acting as if we did. Hey, let's go back to one thing. Recession. All right. We had minus 1.44% growth. But we got this thing when they figure out the GDP called the deflator. All right. And that's where you deduct inflation. So in this case, they've completely understated it. Arguably, we could have been in a recession for the prior 2 quarters, but their analytics for measuring inflation are so skewed for obvious reasons that, we might have had negative GDP growth or none. Certainly 2 quarters ago, 0, and 1 quarter, the prior quarter, end of 2021, we might have had negative growth if inflation was accurately measured. So it would be my contention, John, the recession's already here.
Yeah. And, there's a second effect of inflation that doesn't get the kind of press that it deserves. And that is that it pushes up apparent economic growth. Because, for instance, if you got to put the same amount of gas in your car week to week to get to work, but the price of gas doubles, then you spend more money on gasoline, which, other things being equal, makes GDP go up, right?
Yeah.
That's
Boost
rising
retail
sales. Yeah. And so it makes the economy look stronger. Inflation makes the economy look stronger than it actually is. And then when the government lies about the actual level of inflation, that also makes the economy look stronger. So we're getting lied to from a lot of different directions in a lot of different ways. And when you work out, you subtract out all the lies, the economy's in much worse shape than it appears to be based on the headline numbers. So yeah, we could have already been in a 3-quarter recession now before the real action starts.
Yeah, isn't that interesting? So, statistics lie and liars use statistics. And yeah, like, in what world you're buying less gas, but your monthly expenditure for gas is going up, and that is a net positive for the economy because it's lifting retail sales. What kind of Orwellian world are we living in here?
Well, that's kind of the broken window effect, which is a broader economic concept that, when you just fix something that you broke, that's economic activity and it makes GDP go up. So, if somebody breaks your window and you replace it, the world didn't get richer, but GDP went up. So apparently the world did based on government stats, but not in reality. And that's the same thing with, for instance, healthcare. If you get sick and you go to the doctor, there was no productivity added to the economy in that process, yet GDP went up. And yeah, same thing with inflation. That's just another one of those things that illustrates the broken window effect and also illustrates how egregiously they're lying to us now.
Hey, talk about the broken window effect. They should be having a hell of an economic boom in the Ukraine now because they got every window in the economy is broken.
Well, they will. Ukraine will be a booming economy for the next couple of years because they'll be rebuilding from the rubble their society all over again. So yeah, massive GDP growth coming for Ukraine. But anyhow, yeah.
Hey, well, I'm reading this book about Smedley Butler. the Marine general who famously stated after half a century of fighting America's wars in Latin America, China, all over the world, said war is a racket. And, just look what's going on in Ukraine. All the former Eastern Bloc countries are sending their crappy Russian weapons over there. And what are they getting? They're getting brand new American weapons. And it's one thing we still evidently manufacture mostly in this country is arms. And who's profiting by this war? The usual suspects, right?
Yeah, they just announced or proposed a $30 billion Ukrainian aid package. 20 billion of which will probably go to the defense contractors, which is, that explains why they engineered the war in the first place. At the risk of repeating myself, we started this thing. And if you look at NATO's behavior over the last 10 years, you'll see how we did it. We just encroached and encroached and encroached on Russia's borders. And they said, look, you can't keep doing this. You can't keep doing this. If you try to, put missiles in a country right next to us, that's an act of war. It's the Cuban Missile Crisis in reverse. And anyhow, so we made this happen. And you understand why now when you see how much money we're funneling into the defense contractors. Very interesting cycle that we've got going. First of all, there was 9/11, which ended up with us funneling massive amounts of money into the defense contractors. Then it was the housing bust, which ended with us funneling trillions of dollars into the big banks. Then it was the pandemic, which led us to funnel hundreds of billions of dollars into the big pharma companies. And now we're back. We've come full circle. We're back to the defense stocks, defense companies again.
Hey.
The predators are just feasting the trough here over and over again. And, at the risk of destroying the currency. So we're fairly late in the whole dollarcollapse.com thesis now, where we spend insane amounts of money and we corrupt the financial system to the point that nobody wants our currency anymore. And, if we have time, we should talk about the de-dollarization that's going on right now and how we're inadvertently leading Russia and China and India to bypass dollars and what that's going to do.
Absolutely. Hey, just want to share this little meme that somebody sent me. If you ever feel useless, remember it took 20 years, trillions of dollars, and 4 U.S. presidents to replace the Taliban with the Taliban. and perfect example of what we're talking about. The Taliban was kicked out, then the Taliban comes back 20 years later, and what changed? Nothing in Afghanistan, but if you look at the income statements of the defense contractors that financed the whole 20-year debacle, they made a lot of money. So that was the success. And that was always the goal of this project, So they were very successful about what they set out to do. They weren't trying to save Afghanistan. They weren't even trying to democratize Afghanistan. They were trying to funnel as much money as possible into the balance sheets and income statements of the defense contractors. And they succeeded brilliantly. And then they left all that stuff there, and it's all got to be replaced. Maybe some of it was surplus. So now they get all those contracts to replace all the lost equipment that they left for the Afghans.
Well, we'll get into some kind of a beef with Afghanistan pretty soon. We'll go in there and bomb the Taliban military installations. Yeah, and so then they'll have to rebuy everything. Yeah.
And the cycle continues on. So de-dollarization, it's real, but right now there really is nothing to replace the dollar, but the world is like gradually drifting away from it. Even Israel is keeping, I think, was it yuan's as in their treasury for reserve?
Well, there are things to replace the dollar in certain situations. For instance, Russia and China are trading with each other in their own currencies. Russia is now demanding that Europe pay rubles for natural gas, and I think it's 10 European countries now are doing it. So all of a sudden, you need to buy rubles in order to get your energy if you're, one of 10 European countries, and probably more European countries coming. So, the process is accelerating. And yes, most countries don't have a replacement yet in their foreign exchange reserves at their central banks for dollars, but that's also coming because, okay, very important concept here. A reserve currency needs to be neutral. In other words, buying and transacting in something like the dollar shouldn't advantage one country at the expense of another country, because then you're making a political statement by using that reserve currency. And nobody likes that anymore. Nobody wants to enrich the US further by keeping a lot of dollars on hand. And so they're looking around for the neutral replacement, and gold is top of the list. You know, you can buy gold, put it in your foreign exchange reserves, and you don't enrich any specific political empire out there. Gold is a neutral reserve asset. Oil, sort of the same thing. You know, you can use commodities to back your currency and to a limited extent, and it doesn't automatically enrich one empire and impoverish another empire and cause any kind of geopolitical hassle out there. So we're trending now towards commodity-backed currencies with gold at the top, but other kinds of commodities also in the mix. And the dollar is not part of that conversation. You know, it's all not how many dollars should we own, but how can we get rid of the dollars that we currently own? This is a very big change, and it's probably an unintended consequence of the latest military-industrial complex cash grab, you know, in Ukraine.
No doubt.
Yeah.
No doubt. So one day they'll be writing about this in the history books. But hey, what are you going to do? Nothing you can do about it. Just profit from it, find the opportunities, do the right things, and you can get through this at least intact or mostly intact. But for many of you out there, you're going to ignore it until it's too late, and then you're not going to be able to do anything. Well, that's it for this week. I'm heading off to the Planet Microcap Conference in beautiful Las Vegas. So we'll talk in a couple of weeks, John. Any questions for John? Shoot me an email, kl@kerrylutz.com. Make sure you go subscribe to the Dollar Collapse newsletter, dollarcollapse.com, as well as ours. And John, we'll talk to you again in a couple of weeks.
Thanks, Kerry. See ya.